Goldshore Resources, ticker GSHR, is among the more advanced gold exploration companies. Led by CEO Brett Richards, the company wants to advance its Moss Lake project even more this year. We are talking to Brett today to get some more detailed information on Goldshore and hear his plans for the next couple of months. Welcome, Brett.
Welcome. Yeah, thanks, Bjorn. Thanks for having me on.
You're welcome. So to start us off, please tell us a bit about project, its location. I understand you're in a great neighborhood there, and also the infrastructure situation sounds pretty favorable to me.
Yeah, Moss Lake is up in the northwestern region of Ontario in Canada. The project, we've had it for 18 months now. We acquired it from Wesdome Gold Mines back in 2021, and we've been actively advancing the project with a very large drill program to not only understand the historic resource better, because the project came with a 4 million ounce historic resource, but to try and lead ourselves down into an area where we can have a current resource, which we have now, and also, what the future holds for this project down the road. And we'll talk a little bit about that later.
Okay, well, so as you said, you started a really big program. I think 100 kilometers of drilling are planned, or drilling is ongoing. It has seen a lot of work already. Let's give us a bit more detail on what has been achieved so far. You said the global resource, for example, is like 4 million ounces of gold, but there's a higher grade core to that, for example, right?
There is. So we're about 75,000 meters through our 100,000 meter program. We decided back in November to do a maiden mineral resource estimate because historic resources you don't build on, you actually start from zero, but it's a good guide at the end of the day. So we came out on November 15th with a maiden resource of 4.17 million ounces at 1.1 gram. And it contained in that, more than half of the resource is at 2 grams. So more than half, 2.2 million ounces at 2 grams is the core high-grade material that runs right through the deposits.
Okay, well, that's certainly very good to know. And also it gives you an idea of, well, you can compare the company, the project to other projects of a similar size and grade, and compare it once concerning the high grade portion and the overall resource. Can you give us an idea of where Moss Lake stands compared to other projects, mines in the region concerning that kind of size and grades? And also, if you have an idea already, what kind of prices it would need to make sense to produce at Moss Lake?
Yeah, so our program initially started out to drill this up to kind of 10 million ounces. And there are some peers that we have that have large endowments as well, low grade, large endowments. Back in March, April of last year, we started to hit these high grade shears. So it made us focus on these high grade shears because, grade is extremely important. And now we have a 3.5 kilometer mineralization where the 4 million ounces is in the current resource, and we still have 5 kilometers on either end of the resource for a resource expansion. But we're going to focus on taking this existing resource we have. We are going to do a mineral resource update, a secondary one in April, but we're going to take this through a project, through a PEA and through a project. Now, when I compare ourselves to our peers, as you say, in our region, in our country, I look at open pit, low grade development projects in Canada. We may well be one of the highest grade open pit development projects in Canada when we're done and when we get through PEA. And we are trading at $8 an ounce today, which is extremely undervalued to our peer group at 30 and 35 and 40. And then the high grade peers that we have, much like Marathon, sitting at 1.86 grams, and us having more than half our deposit at 2 grams, they're trading at $90. They're trading at 10 times our valuation today. So I see significant upside in our share price relative to the valuation of our peers around us.
Sounds like it. You mentioned one possible catalyst for that, apart from ongoing drill results, of course, which might be the new or secondary resource calculation in April or this early second quarter, end of the first quarter, I think you said. Can you give us an idea of what the other milestones are going to be this year, and in what kind of time frame? What we're looking for? You mentioned the PEA, for example.
Yes. So, and again, I need to put everything into the context of the market. The market right now is the worst I've seen it in my 36 years of being in the mining and metals business. This is very difficult. It's difficult to raise money. It's difficult to get traction. Although we actually have really good liquidity. We're trading anywhere from 500 to 1 million shares a day. And that's quite good liquidity for us. But, it is very difficult. And our share price has been absolutely hammered as a result of the macro last year, the geopolitical situation, the hyperinflation, which all boded well for gold price, but gold equities absolutely got hammered, and we haven't recovered yet. So we're trying to organize our strategy around this year around having two major catalysts come out. A secondary MRE around the first week of April, and the results of a PEA, or a preliminary economic assessment, to come out the first week of September. And those two events, I think, will be very defining for Goldshore. We have 4.17 million ounces right now as a current resource. We're targeting 6 million ounces for the April MRE. That's what we're trying to target. And then the PEA, this will be a fairly compact project, probably in the order of magnitude of $300 to $400 million, and in the order of magnitude of 140 to 160,000 ounce production profile a year, with the all-in sustaining cash costs around $1,000. So this project works in this market. This project works in this capital market environment, where if I did drill this out to 10 million ounces, the market's not going to give me any value for it. But right, taking this and putting this into a project that has near-term production, I think probably creates more value at the end of the day. And I think our project's going to work at $1,200, $1,300 gold price. I think the break even will be around 12 or 1,300, but we'll make significant money at $1,800 gold.
Sounds like it, yes. And also, you mentioned it's hard to get financed, but you did, though. At the end of last year, it was about like 5.7 million and another million after that. So I guess some of that already goes into or went into the drilling. Can you tell us how far you get with the rest of what you have left at the moment?
Yeah, I make no secret. We have around $3.5 million in the treasury right now, maybe close to $4 million. We are drilling right now. We are going to pause drilling and focus on everything required to get the MRE out or the PEA out, and that is metallurgical test work. That is the modeling and the sequencing of all the material to get the secondary MRE out. And then that'll be all of the associated studies and work required, working with our consultant to get a PEA out on the timeframes I mentioned. So we are going to manage our strategy this year to the catalysts that are going to be around us. And if we wake up in September and we have the economic results of a PEA out, we'll have to recalibrate where we go from there, because the next logical step for us is to infill drill, which costs a lot of money, and also take this through feasibility study, which again costs money as a function of drilling. So this market, as I say, is very difficult, but I think we have a strategy to create value in the short term, but also long-term sustainable value for our shareholders.
Well, thanks. That's good to hear. But you also, we've been talking about where you said you concentrate on the 4 million ounces you have, flesh them out, get them to 6 perhaps. But you also mentioned the bigger potential at like 5 kilometers at both ends, you said. Can you give us a bit more information about that? might be in the longer term future where that could lead?
Yeah, I think in this market, if we were a 100 million cap company or 150 as compared to our peers, which they are, even at the same, like for like comparisons on size of resource and location, et cetera, I think the market would allow us to build this project. And I built 3 mines much like this in my career, and I would love to build another one. And Pete Flindell, who's my VP of exploration, who lives up at site. I'm up at site right now. We actually would really like to build this, but this is all going to come down to kind of where the market is at the time, whether there's financing alternatives available for us to be able to do that without blowing out the cap structure of our shareholders and having just crazy dilution. The alternative for us is to partner with somebody, and I see that in this marketplace as a more viable alternative. You're starting to see M&A, you're starting to see consolidation. As recently as last night, Newmont has made a bid for Newcrest, and those are 2 giants in our industry that are merging together. There is I'll say benefits and synergies to size and scaling up and being larger, and I think that is something that we will look towards this year. Maybe that's another catalyst for us, but I think we'll be looking to partner with somebody, whether that's a mid-tier, a major, or even a junior, where we make ourselves larger. I think the narrative has to be something different than it is today, because this market just doesn't favor small junior mining single asset companies anymore.
Okay, thank you very much. Now, before this gets too long, could you just give us like a 1-minute summary of why is a good time now, or now is a good time to have a closer look at Goldshore?
Yeah, I think if you're not invested in Goldshore, I think you really need to look at this. And you look at this as an investment entry point today at $8 an ounce, as compared to the market and as compared to our peers. If you think gold price is going to go down to $1,500 or $1,400 or $1,300, then Goldshore is probably not for you. But if you think it's going to stay above $1,600 or $1,700 for the foreseeable future, and possibly play in $2,000, this is leverage to the gold price. I think we can do multiples of our share price in the near term, 1 to 2 year period. I think this really should be a $250 million company, and we'll demonstrate it. And we're going to do it through a secondary MRE, and we're going to do it through the results of our PEA that'll be out in September. So I don't think you'll find a better entry point into Goldshore Resources than right now.
All right. Thank you very much. We'll certainly look forward to see how it goes. Thank you.
Yeah. Thanks, Bjorn.